Welcome to Cardano Over Coffee with your hosts Epoch Pool, Lido Nation, Jenny from the Blockchain, Blockjock, TCT, Cooktime, and Hero Pool. Today's show is sponsored by Yam4, crypto loans with no margin calls or interest repayments, and indefinite loan terms. Learn more about today's sponsor at yam4.com. Today's guest is Shahaf Bar-Geffen, CEO of the COTI Network. COTI has partnered with IOG and they're building the DJED stablecoin on the Cardano blockchain. DJED is an over-collateralized stablecoin backed by ADA. Grab your coffee, sit back, and let's talk about DJED.
All right. With that stuff aside, I think our guest is already up here, probably beat me up here. So how are you doing, COTI? How are you doing, Shahaf?
I'm doing well. Thank you. Thank you for having me here.
It's a pleasure. So usually we kind of start these shows by just trying to get to know, the speakers a little bit more and understand, how they got into crypto and then ultimately how they found their way to the company that they're in. Yeah, so we want to see, a little bit about your history, kind of what you worked on before getting into COTI, and then how you kind of, got set up with COTI.
Yeah, sure. And I think we also have Yuval from my team here. Not sure what his Twitter handle is, but Yuval should be here as well. He's like a lead developer in COTI, and he also leads development of DJED from our side. Okay.
That's awesome. So real quick, Yuval, if you can request speaker, I can't find in the 100+ people. So if you could just request speaker in the bottom left, we'll get you up here. And if anyone gets kicked out of the speaker role, my apologies. We're just gonna have to manage the count. I would love to have more people from the COTI team. So we'll happily bring up anyone from your team, Shah.
And make sure you're on a phone on your mobile device. Otherwise, you can't request to speak.
Okay, so I think we'll probably have Yuval here. Okay, so background, myself and everything. I'm 45. I live in Tel Aviv in Israel. I got into tech when I was 25. I had some army career, and when I was 25, I kind of like immediately went to entrepreneurship. Started a company. Which is called Web3, believe it or not, in 2006. It wasn't really about what Web3 is right now. It was more of a media company, did really well. Eventually was acquired by IPG, McCann Erickson. Then co-founded a company called Positive Mobile, which was one of the world's first mobile ad network. That was acquired by Brightcom. And then ventured into crypto probably 2015, late 2015. Mop around for about 2 years, and then co-founded COTI with my co-founders, and this is how I got into crypto.
What do you think so far? Are you feeling like that was a good choice? Are you ready to double down in this market?
Absolutely. Look, absolutely. I think a lot of the things and who we are kind of like molded by how we started, and COTI was started like immediately in a bear market, right? And we were like an infant, right? Like a baby that needs to survive this winter, and we did, and it kind of shaped us in that way. So we really, it's almost a cliche, right? Building in a winter is great, but like for us, really, it's good. It's fine. Like we know we'll make it, to the other end. So it's fine. It's painful, but so is training in a gym, right? It's we can make it. And for me, this space, I would never change it. Like even in the dull days of crypto, it's still so much better than so many other things that I could have been doing. So I absolutely love it. It sits in the intersection that I absolutely love. Between tech, consumer, internet, media, and finance. And absolutely, yeah, no, that's great. I wouldn't change it at all.
Awesome. I love that answer. I think similarly, that intersection is so interesting. It's amazing to be, where we're at right now. Well, Yuval, I noticed that you popped up as well on speaker. Welcome to the show. If you want to just maybe give, a very quick introduction for, your a little bit about your background and how you ended up connecting with the COTI team.
Yeah, sure. Hi. I studied software engineering. I worked for Intel for a few years, then for ZoomInfo, later purchased by Discover.org, if it's familiar to you. I had my own startup for 2 years, and now I'm leading the development team of the application for COTI. So crypto was a very hot issue, and I thought and find out it's the best place to be.
And how many people are on your team? And how many of those people are developers?
So on my team, there are two other developers, and this is the team I manage. It's one department of our development. So
Yeah, overall in
this
COTI,
is my small team.
overall in COTI, we're about 45, and I would say that's probably half engineers. The other half are other things.
Awesome. Thank you. That was going to be my next question. It's actually my favorite question is what is your ratio of developers? So appreciate you coming out with that information at the beginning. It sounds like you have a lot of developers. That's great.
Yeah. But if you ask them, that it's hardly enough.
Oh, of course. Well, if you're looking for more, I am open for job opportunities. We can take this offline. For Hero
dude, you have no idea. Like you've now been immediately targeted by our HR. It's you just need to hint, and she'll be all around.
Great. Well, yeah, I'm sending large hints, but yeah, I'm curious to learn more about the COTI team, and maybe we can kick off here a little bit more with how you ended up partnering with IOG and what is that partnership kind of about?
Yeah, well, look, it's a long-lasting partnership, right? I think it's 3 years now since we first met the IOG team when Charles Hoskinson was in Israel. He visited the COTI's office and we really hit it off. The first thing that we did was ADApay, that is still a live product, and later on, C Fund, like the Cardano ecosystem fund, made their first investment. Like COTI was their first investment. And now this is something that grew. Like we were talking about this for the last 2 years, and then November a year ago on the Cardano summit, we've announced that COTI will be the issuer of DJED, which is like a white paper that has been going on and being developed and researched in IOG for like 4 or 5 years, I think. And then we decided, okay, IOG will do smart contracts, COTI will do front end, COTI will then do the business development and the issuance around it, and we'll take this forward once launched.
So does that mean you're also in charge of distributing SHEN?
Yes, we are.
For the folks in the audience, could you tell us just why are we talking about SHEN when we were supposed to talk about DJED, and why are these two things needed for a stable?
Good. So this is like where DJED becomes like super interesting. Like it takes a while to really understand how DJED works, and once you get it, you understand like how interesting this model is. So like the world has fiat-backed coins, right? We understand that like the capital efficiency is 1-to-1. It's all great, but you need to trust a centralized entity somewhere. You need to take into account the possible censorship, the seize of assets, everything that comes with fiat, right? And it's also like the collateral lives in a different sphere than where your actual token is in the digital sphere, right? So that's fiat, and everybody understands that. Now you have two types of stable coins: algorithmic stable coins, and a lot of folks said, DJED is an algorithmic stable coin, and we were wrong about this as well for a while. But algorithmic stable coins, like the idea behind them is that they need to be very capital efficient. So essentially, you deposit X amount, but you take out of it more than X of a stable coin because there is some governance token involved there. Like bad examples will be UST and Luna. Good examples so far will be Frux, right? So you have that. The problem with algorithmic stablecoins is obviously the design, right? It can depeg, and it had depegged in the past, and like you need to have a lot of trust in the governance token that is issued with this algorithmic stablecoin, and like reality has proven that this is not the best way to go. There is always this danger out there. Now you have over-collateralized, and now we're getting into DJED and SHEN. So now you have over-collateralized stablecoins. Over-collateralized stablecoins means that for every X that you will deposit, you will get less than X of a stablecoin, right? So it's less capital efficient, but it's obviously safer in terms of depegging. What DJED did, like the idea when DJED was conceived, was how do we build a stablecoin that will never depeg, but can be like fully digital. It can be backed by cryptocurrencies. It can be community driven, like all the good things, but will never depeg. How do you do that? Well, you just over collateralize. And how much do you over collateralize? By a lot, right? So DJED is over collateralized by ADA and a lot of ADA, like 4x to 8x, meaning ADA price can drop, like at the lower bound, it can drop by 75% in an instant, and it will still not depeg. Or the higher boundary, it can drop at 87.5% or more, and it will still not depeg. This is where SHEN gets into play, because the question is, okay, so who's providing all this over collateral and why? Like how is it not very capital inefficient? And the way it works is that if you want to mint DJED, you deposit $1 worth of ADA to the smart contract, and you get $1 worth of stablecoin. So it's 100% capital efficient. SHEN, on the other hand, is the token that is given to all the folks that provide ADA to the smart contract and over collateralize the whole thing. Like they are the ones that are taking the burden of providing all the ADA. Now, why would they do that? Because they get incentivized. The way they get incentivized, other than the token itself, SHEN, is because they are the ones that collect all the fees, all the equity from the platform. All these mint and burn processes are fee-based, and that fee goes to SHEN holders. SHEN holders are also longing ADA, because if ADA price goes up, then you actually need less ADA to pay all the liabilities to DJED holders, right? Like if ADA price is twice as much as it used to be, and someone wants to redeem his DJED, you actually need less ADA, right? So all that extra ADA goes to SHEN holders, so they're longing ADA, and they are getting farming rewards and staking rewards and all the good things that come with ADA. So this is why holding SHEN, if you're longing on ADA, is actually very beneficial. And this is how this symbiotic ecosystem works. DJED is super capital efficient, one-to-one, and it will not depeg, one hand. The other hand, SHEN is more a speculative token. If you believe in ADA for the long term and you hold SHEN, then you probably will be benefited. By how much? We estimate it to be like 30% a year or so. So I hope that very long answer kind of summarizes everything.
So yeah, does anyone want to kind of follow up with specific questions about DJED and SHEN? I know for me, I'm just wondering as a bag holder myself, right? Like, should I be going out and trying to get DJED and SHEN? Do I only need DJED? Will I be getting the same APYs on DJED as I would on SHEN? Am I even able to get SHEN? I don't know if you can speak to how I should approach this.
Yeah, because we've been analyzing this with some big liquidity providers, and I can now safely say that we've secured liquidity, quite substantial liquidity actually, to the protocol. So when it launches, it will already have significant liquidity. So we've been analyzing this with them, for them, and the idea is that you actually want a ratio, right? You want you want SHEN and you want DJED. How much? I would say in a 6-to-1 ratio leading towards SHEN, I think is optimal. What you can do with DJED is obviously there will be farming rewards with selected dexes, like 3 of them. They will be announced, but that's pretty cool. So you'll get that. There will always, there is always arbitrage opportunities, right? Between if in some decks there's great demand for DJED and it's somehow in the decks, right? Not on the platform. The platform is always $1, but in the decks, like there's a great demand for DJED, you can probably mint some in the platform and then sell it in the decks and kind of like level up the market. SHEN will have all the benefits that I've already mentioned, including farming rewards. So that's why I would hold some substantial amount of SHEN, and this is like what we'll be doing ourselves, and this is what liquidity providers will be doing.
So if I got that right, you're saying I should have 6 times SHEN. So
to DJED, this is like a very healthy ratio. I would hold both, and this is like a pretty good ratio to hold. Obviously, then you need to observe, right? And the platform kind of like shows you everything. So you need to observe and see like how things evolve, what's happening, indexes and everything. But this is a good starting point, I think.
Okay, well, I definitely appreciate like just how clear you are. Rather than talk in circles, you gave a very specific ratio. So I assume that's because that's the kind of midpoint between kind of 4 and 8 collateralization.
This is a healthy point to be, and obviously, everything that I say is not a financial advice, but this is like how we see it, and this is how we gonna play it ourselves to begin with, and then we'll follow and see how everything works.
All right, you heard it here, folks. Shahaf's personal Twitter account for investment advice. We will see how it goes. Lido, you have a real question?
Yeah, just a follow up. You said, my ear pricked when you said never depeg. That is such a strong statement. Is that backed by math? Oh, that just seems like a very strong statement. Never depeg. What is that backed by?
So
is that in the white paper, or is that formula coming up after launch or something?
First of all, it is in the white paper, right? And let's be clear, there are scenarios that are just very, very unlikely in which you may see the peg. But again, very unlikely and it's much more secure than what you'd expect from other stable coins around, and I'd like to explain why. First, there is the battle-tested Sigma USD. Sigma USD uses almost the same algorithm as DJED in the Ergo network. So that was like a very first iteration. And what it has seen there is like a crazy rise and collapse in the last 2 years in Ergo price. And a lot of things happened in their system, and like you couldn't, burn your their version of SHEN tokens, and a lot of things happened. One thing that did not happen over time is Sigma USD losing its peg. And look, it's not like high math. It's just the level of collateralization, right? For DJED to depeg, as I've mentioned, ADA price needs to drop by more than 75%, again, on the lower ratio of it. It needs to happen pretty fast. And people could still then burn their DJED at the platform, right? So in that very unlikely scenario, you may see some sort of a depeg or some value that is being lost. How feasible it is that ADA price will immediately drop by 75%, I don't know, but this is where it can get risky when you over collateralize.
So I got to jump in and ask, when you said a short amount of time, I'm sorry for my chewing, I got offered bacon and you never say no to bacon. Hopefully you agree with that. But what is the short time that you were saying just now? Like 75% over 3 days, 5 days, 1 day?
No. It needs to be so fast that people will not be able to burn their JED and like kind of like leave the smart contract, right? Because if they could, so the price is dropping. You say, okay, not comfortable with this anymore. I would like to, burn my JED, and you do, then fine. Then it's not losing its peg. And again, it can also like let's say there's a bank run and all the JED holders want to burn their JED and take ADA out. It still works, right? Because it's over collateralized. So this is why it needs to happen like in an instant where everybody couldn't withdraw their ADA in time, and this is why it's unlikely.
Makes sense. I know I've been a part of my fair share of flash crashes, but I don't know if I've seen 75% in a second. So
and again,
interesting.
it's not like an Oracle thing. It has 6 different oracles. It's not that. It needs to really drop in price so much and so fast. And this is like at the low end, right? This is like 4x. If it's 8x, then it needs to drop in the price, by 8x for it to actually start losing its peg.
So let's say I'm a black hat hacker, right? I want to burn it all down. So if the price of JED, or if price of ADA is falling rapidly, and I want to destroy everything, do I go and start burning SHEN? Will that actually hurt the ecosystem if I start getting rid of all my SHEN?
If you did that, right? So what would happen? The JED holders could still burn their JED, right, and take the ADA out, because at all scenarios, no matter what the collateral ratio is in the system, you can still burn JED and get ADA out, right? This is the over collateralized, and JED holders have preferences over SHEN holders. What could happen is, like, if the system goes below 4x over collateralization, is that this is the point where SHEN holders could not sell their SHEN to the platforms. They can sell it in the market, but they couldn't sell it to the platform and get their ADA back. They'll need to wait until other collateral has been added, or until other people have, or other JED holders have actually burned their JED to take ADA out. So you couldn't really destroy the JED holders. You can probably delay the SHEN holders again, but like you'll lose this, because you'll be selling SHEN at a massive amount.
And who are those people who are going to be selling SHEN, or like who are keeping track of this?
Everybody. There's no anybody can connect to the smart contract and burn the SHEN.
I meant like from your organization perspective, like is there a team tasked with this?
No, it's a smart contract. It's fully decentralized. We're actually doing nothing. It's fully automated. There's no man in the loop. There's no decision process. The algorithm of how it works is there, published, audited, and you can see it, and you can see the ratios the entire time. It's fully on chain, everything. Yeah.
Okay, Blackjock, what do you got for us?
Yeah, first off, Shahaf, thank you for coming on to the show. We really appreciate it. What I'd like to ask you is one, you kind of alluded to a little bit, having to do with the delay. Because originally, I think you were planning on launching in fourth quarter of last year, if I remember correctly. And I think there was an issue, obviously, with Terra Luna and that whole fiasco. And then it seemed to me, my perception, because I'm not part of the group, that you guys were taking a reevaluation and making sure that you had all your ducks in a row and that this thing was solid before you brought it out. Is that really the impetus as to why you delayed it? And then the other question is what oracles will you be using for the data feeds?
Great. So Yuval will probably answer the oracles, because I'm not educated by the tech at that level, but Yuval can probably answer that. With regards to the delays, you're right about the delays. We wanted to do that in the fourth quarter of last year. We actually even wanted to do it sooner, to be honest. but it wasn't actually Luna that caused the delay. It was two things. One, the Vasil hard fork, and the fact that the code that was written at that point wasn't compatible, so we needed to, or IOG actually needed to rewrite quite a few things. And then when that happens, you actually need to do the audit again, right? Because we can't put code out there that hasn't been audited. And that takes time. Like anybody that has ever done an audit, you know, it's a very lengthy process. There's a lot of demand for these companies, so it takes time. So that was actually it. Lastly, I think everybody kind of like undervalued how long this will take. It's quite complicated, and this is why. So it wasn't Terra Luna. Obviously, when Terra Luna was happening, you know, everybody stopped, learned, reasoned. How is this different? And again, this is very different, a very different system than Terra Luna, obviously. But this is like a moment where everybody paused and started, you know, making sure that everything is in a row. So you're right in that extent, but it wasn't delayed because of that.
Great, thank you, Lido.
Just super quickly, Shahaf, and then I think it may be time for community question now, Ipad, unless you have other things. But so the white paper that IOG put out talks about the base protocol, right? It doesn't really talk about some of the specific choices that COTI made for this implementation of it. I'm just wondering if there would be, and I know you said there's no high order math or anything, but would there be supplemental documents or reasoning for some of the specific choices that COTI is making that's going to come out in like some long form, like a paper or something? Is that on the roadmap at all?
We can probably add a few things like how we've like an article with some updates about a few things that we made there. And again, there will be, you know, further versions of DJED where you know, COTI is kind of like taking over a few things now, and a few things we may want to alter, change. So we'll probably publish that. But right now it's pretty much what's there in the white paper. Maybe the front end has a few, you know, tweaks. But maybe Yuval, you want to comment about a few things that a few design decisions that you guys made or affected?
Sure.
For
So
example,
maybe
right?
before
Just to interject here too, or to add to the comment. For example, why did we pick 4-1 as the bottom and not 5, right? Like stuff like that, and any kind of scenario or stuff that you guys did to sort of arrive at that range.
So first I want to comment on the Oracle. We have 6 different sources from major exchanges. We take all of them. We check that the deviation is not too big. And if the deviation is okay, then we deploy the Oracle to the network, and then we take it as a source of truth. So one of them is CoinMarketCap, and the other 5 that I don't want to disclose to not expose them to attack or something. Second, the decision about the ratio that you talked about is we have here a team of mathematicians, and what we did is we let them to calculate what they think will be the best ratio for ADA for a specific coin against dollar, and this is the number they came out for.
So I guess, so back to the original question, will that calculation be published at some point, a supplemental document once it comes out, or has it been published? I haven't seen anything.
I think we did publish something around it, but you know, it's probably good housekeeping. So we'll probably publish something around this, and like a few decisions that we've made and why, and etc.
Yeah, especially the math. I know it's not sexy and it's probably boring, and probably just me and 2 other people are gonna read it maybe. But it seems useful for the community to know maybe. I think.
Sure, sure. It's like Anton from our end did it, and I think we can publish it. Okay, gotcha. We'll do it.
Super cool. Epoch, did you have anything else on your list, or should we go to the crowd?
Yeah, I guess we'll be getting to the crowd here in a second. Do the co-hosts have anything else on their mind? Because I guess I only have one minor question to ask for Hero, because I'm going to embody my hero spirit for a second. What about small pools? And what about decentralization? And how are these positions of ADA going to be staked or JED or SHEN? How do you plan to kind of work with the network? Do you have any plans to work with small pools? Anything of that nature?
Oh, sorry, I was off. Yeah, so with regards to staking, we've actually over time there's going to be, and I think IOG is figured out like how to build a very robust solution to how staking can be done. Even on dexes, on these big pools, etc. Like when you commit to this smart contract. Until that happens, we've actually wanted to make sure that rewards are added, like that it's not lost. So there's some workaround that we'll be employing right now. Yuval can probably describe this in a second, but the big idea is that everybody will stake into. Everybody will send data to the DJED smart contract that will be then staked, and that pool is like a new pool that will be created specifically for this. Then the rewards are sent to an address, and from there it will be distributed to all depositors. So it's not like the straightforward process that you have right now when you stake ADA, but it is. But the value will be captured and then sent to everybody. Yuval, you wanna? Did I miss something?
You didn't miss anything, but if you want me to extend, then if the audience want to extend, then I can.
Yeah, do you have anything to add, or is there any, is that all going to fit in one pool? Are you guys running pools now?
Yeah.
No, but it's not running pool, and then we won't start running pools for this extent. We'll probably be using. I don't know if you're familiar with Wave. They're managing all the big pools for IOG, and they'll probably manage this to begin with. As it grows, then we'll probably need to think more about further support and how it's done. We won't be managing pools ourselves. I'd rather let the community do that.
Okay, well, we're halfway through the Cardano over coffee, so this is a great time to remind folks to go ahead and share out this space. So on the bottom right, you'll find a little tweet bubble. If you can click that and go to the very top tweet, if you can like, share, retweet that, we might get more people in here. We already have over 200 people in the space, so pretty great turnout. I just want to say thank you to our guests for coming out here and being proactive with the community. It's always great to see folks joining the show, and also with a balance of the tech and the business side. That way we can ask all sorts of great questions. And we're about to get into the community questions part of the show. So if you're a community member, request speaker and try to get up here. If you've already asked your questions and you've said your piece, feel free to drop down to speaker. That way we can see more people. The last thing I got to add here before we jump back into questions is a part of our kind of mid check-in. Yet again, please share out the space. But also, this week our shows are sponsored by YAM4. Crypto loans with no margin calls or interest repayments. And indefinite loan terms, yes, it's possible. So check out YAM4, check out Cardano Over Coffee's YouTube channel. Please share and subscribe. We would definitely appreciate any love that you can all give. And with that, that's the end of the mid, and we can get back to questions. So anyone here want to kick us off? Davis, you've been waiting patiently, my friend. Why don't you tell us what you got?
I'm somewhat familiar with directed acyclic graphs because of Hedera hash graph, but I'm really interested in what is a multi-directed acyclic graph and also the consensus protocol with trust node and trust chain. I saw a brief description of it a while ago on your website, but I'd like to know a little bit more about how it works.
Sure thing. Yuval, do you want to take that one?
Sure. So this is not the major thing that my team develops, but when you talk about multi-direct acyclic graph, then because we're holding a ledger and our ledger symbols in the direct acyclic graph, then the way we connect the graph is every transaction added on top of another transaction, and all of these are on top of multiple sources. So it's multiple sources, direct acyclic graph, and the way we verify the transactions is the weight of the transactions above it, all its children. If you can repeat the part about the question on multiple.
I think the other question, Yuval, was about consensus, proof of trust. Do you want to take that? Do you want me to take it?
Yes. Sure. The consensus. So basically, I kind of explained it. So each user or a party in the network have its own trust score. And basically, when you perform a transaction, it depends to what node you send it, if the trust score is better for the node or not. But basically, you add the transaction on top of part of the graph, and the children that base themselves above it, like another transactions, each of them have trust score, and when you reach 100 trust score on top of you, then you get verified. So this is how we verify stuff in the trust chain.
I would also add that the way it works is that transactions with a similar trust score are bundled together, right? And then you can imagine like these long chains of transactions with low trust score and short chains of transactions with high trust score because it will just take more transactions to reach 100, for instance, if it's all low trust chain scores. So that way, you can kind of like imagine this as sort of like sharding, right? The network organizes itself around transactions with a higher trust score and low trust score and medium trust score, etc. And this is proof of trust. You can probably add links like to videos and everything that explains it a bit more.
No, that was a really good explanation.
Thanks, Davis. So while other people are formulating their questions, I had a little question surrounding there's like a fail-safe having to do with a certain number. I'm not a mathematician, I'm not a coder, but I understand that you can actually freeze the minting and burning of the actual token. Explain why that's important and how it's done, I guess, in basic terms.
There's actually, and Yuval, feel free to weigh in, but like it's not about fail-safe mechanism. It's more of like how this works, right? So you can always DJED to get your ADA back, right? This is the promise of the whole system, right? Always be able to redeem your DJED for ADA. You cannot mint DJED when the system is below 4x collateral because it's not safe enough. And you cannot burn your SHEN when the collateral is below 4x because DJED holders get their preferences. There is also another limitation. If collateral is like 8x, so it's super over collateralized right now, you cannot mint SHEN anymore. And this is more of an economical decision because we don't want to dilute SHEN holders. The equity is big enough, and now whoever is not there right now can't be part of it. Before other folks mint more DJED, the collateral is lower again, and then other people can mint SHEN. I don't know if this is what you had in mind.
No, that's like perfect. That explains it very well, especially for somebody that isn't reading the white paper. So thank you very much for that. Matthew, do you have a question?
Yeah, I was going to hope somebody would ask. Thank you, Shahaf, for coming on the show, and I do appreciate the opportunity to ask questions. The two questions that are sort of burning in my mind are, firstly, the one that Lido was hinting at, that one of the base premises of Cardano is that it's built on a layer of peer-reviewed, open-sourced code and white papers that are able to be deconstructed and researched by the community. So without actually seeing the math and the assumptions on, say, burn rate of JED and collateralization, the rate at which it moves and the way at which people respond, I think that's an important piece that needs to be released. And so I wanted to see when you were going to release the math and the stress scenarios that you tested, and how quick this immediate 75% drop needs to be. What are your assumptions around the reaction function of the JED holders and their propensity to burn as things fall? Because, as you know, as ADA prices fall, JED holders get more ADA for their JEDs, so it's like their number goes up as ADA prices drop.
Yeah, you're spot on. This is the risk that SHEN holders assume, and vice versa, right? This is why I said SHEN holders actually long ADA, because if ADA price goes up, then JED holders get their dollar worth, but they're not getting as much ADA. So you're right about this. In terms of like what will be published and everything. So obviously the white paper is out there, and a few other articles. The code itself will be fully open sourced. And again, as you've mentioned, this is like a pillar in how IOG and Cardano are building things. We want to make sure that the audit is published first, and then the code will be published, obviously, because for obvious reasons. Whatever is missing, and like whatever stress test, math, and everything that we've done, we'll sit around and we'll make sure that we publish everything, like whatever calculation stresses and everything that we've done will be published. Give us a week or two, and I think it will be out there.
Is SHEN available to be purchased by Americans?
So there are two things, right? There is the actual use of the platform, and that is divided to front end and smart contracts, right? As I mentioned, the platform is fully decentralized, so anybody can interact with the smart contract. Nobody can stop that, right? Aliens can interact with this. Everybody can interact with this. The front end is also like JED XYZ. This is the part that COTI actually controls. This is geofenced for the unfortunate, obvious reasons. That said, SHEN and JED will probably be on DEXs, centralized exchanges, and everything, and anybody can interact with that and buy that, depending on the centralized exchange or the DEX policy. So if they don't have limitations, obviously we can't limit it, and we won't. So I would say the limitation for the US is around the front end and JED XYZ.
And I guess my final question would be on the Oracle. Yuval, you mentioned that you have 6 different sources and that you will compare them and you will apply the Oracle value to the smart contract. So how is that Oracle managed? Is it a decentralized Oracle that is controlled by a variety of parties, or is this something that COTI has built and maintains by themselves?
So the Oracle is part of the project that was built for JED. As an operator, we run the program that get the sources and look at the deviation and deploy it if it's viable. So it's not a decentralized decision, but it's being deployed, and the users of JED will definitely be able to see the deployed result and the consistency with the market result of other price.
Good morning, guys. Hey, Shahaf. Hi, Yuval. Thanks for being here today. You guys have been on quite the promotion tour already, so really appreciate it. I was wondering if you can talk a bit about the rollout and how this is going to happen in terms of all the partners you have lined up and platforms, DEXs, etc. Will it happen all at once or in stages, or how is this going to work? And of course, are we still on track for January? Thanks.
Okay, great. Let me start by stating that we are still on track for January. We are handling a few things that we've noticed, since the deployment of testnet, a few bugs, a few things that we fixed, but we're still on track for January. With regards to rollout, so we'll start off by rolling out to 3 selected DEXs that we've partnered with. They'll have this rewards, incentives, farming program for certain pairs around, DJED and ADA, SHEN and ADA, etc. So this is how it starts. Then we'll have a gradual rollout with all sorts of partners. Now, obviously, a lot of things partners can and will probably just do themselves. As DJED is on public mainnet, they can just integrate it immediately and start working. But we do have a team that coordinates with all the over 40 partners that we have to make sure that we facilitate everything and everything will go out as planned.
Troy, you want to go?
Yeah, thank you. Hello, Shahaf and community. Nice to talk with you all. I'm talking from Perth, Western Australia, which is a very, very long way away from everyone. Shahaf, there's probably a lot of the community that would like to probably know the exact format that how obviously ADA gets converted to COTI with the operational fees, which is, obviously very, very a small amount. But in what format will that actually be? How is it going to be converted through to COTI? Will it be done via a contract? Does it need to be manually done? And what frequency will that be done? Is it something done on a daily basis, or a weekly, or a monthly, or what's COTI's consensus for that?
So first of all, it may not. There's a good possibility that it will not be a small amount, right? If this goes well, then this is not a small amount, and hopefully it means that everybody won, right? Because COTI just takes part in the end, but it means that everybody won. So hopefully it's not a small amount. Then, the idea right now is, look, we don't need to automate things before we're doing it a few things, and kind of see the process and realize, okay, this needs to be automated and this doesn't. So to begin with, it's going to be very straightforward. We are going to market by COTI, then send it to the Treasury, and people will see it through the APY. I don't know about the interval, and obviously, we can't say in advance, hey, we're about to buy COTI in the market, because it opens up all sorts of manipulations that we don't want to be part of. But once it's done, at least to begin with, we'll probably let people know that, hey, we've done this. People will probably see it in the APYs in the Treasury. But to make it short and quick, we'll just market by, let everybody know that it happened. People will see it in the Treasury, and repeat until we figure out what's the best way to, and then it's done.
Yeah, and of course, everyone in the Cardano community can join in and collect those APYs by getting involved within the COTI Treasury.
Yeah, those that are not yet familiar with COTI Treasury, it's a very cool system that has been developed. It's the 4th iteration of what was COTI's staking program, and I encourage people to test it. It's in treasury.coti.io.
Thank you, Shahaf.
So
thank you, community.
Thanks, Troy.
Yeah, hey, thank you. So this might be related to Troy's first question. There's we've heard about SHEN and DJED, and there's an ERC20 token, COTI. Can you talk about how is that related to this? Is it going to be used in this?
Actually, it will not be used in this. The reality is that COTI's Trust Chain and COTI's ERC20 version usually follow the same value, so you can probably value kind of is not lost. But there will not be any use of COTI's ERC20. COTI's treasury system is based on COTI's Trust Chain on its native assets. So no.
Well, thank you.
Dr. Ada, Dre Ada. What's up, Dre? All right. My question is around the U.S. Investors. I know that you said that they will not be able to deal with the front end of the COTI platform. However, will SHEN and DJED holders still be incentivized the same as the users that are able to interact with the front end of you guys' platform as far as, rewards and things of that sort?
Yeah, absolutely. Yes.
All right. That's all I have. Right on to you, Sir Keith.
All right. Thank you very much. Hi, Shahaf. This is Keith Temple calling in from Washington, D.C. Given my backyard is a big haven for U.S. regulation, obviously every country is going to have different regulatory laws. I wonder if you could talk a little bit about the strategy and an outlook that COTI has for global regulation and then in particular regulation in some of the larger markets.
Sure. So that's actually fairly interesting because this is not directly DJED related, right? This is more COTI related, but and we've kind of alluded to that, and there will be more information in our upcoming roadmap. But the way we see the future is that, and I don't think it's a gloom perspective, but the way we see the future is that regulation will be fiercer and will apply, and we need to think about the future of Web3 and how it can coexist with regulators and regulation, because I don't see any way around it, and I'm not even sure that it's a good idea, right? Over time, you do actually want things to be regulated, settled, clarity. You want to know where things are going in that sense, and because of that, one of the interesting things that we're working on in COTI is what we call COTI V2, so like a new infrastructure. And it's going to take us a while, right? At least a year. But we are talking about technical design that can actually fit rules, laws, compliance, regulation, and all baked into a layer one. So I know it's not super clear right now, but just imagine like a layer one that works with more than just smart contracts when it tries to deal with regulation. Imagine like a membrane that can allow certain transactions to pass and certain transactions not to pass because they don't fit with the specific law that ADApay developer wanted to follow. So it can be regulation. It can be like, hey, I've developed ADApay. When it comes to the US, I want to make sure that I comply with SEC, right? So I ask the layer one to enforce this for me, right? Because some people wrote snippets of code that can actually do that, right? But when it comes to, let's say, citizens of the Netherlands, then I want a different regulator. I want MiCA to apply. And some DApp developers don't mind, and they don't want any of it to work, and that's also great, right? So, but imagine a layer one that is flexible enough to allow you to do all of that without being bothered with writing everything yourself, without being bothered with what smart contracts can do and cannot do, et cetera, et cetera. So this is like the big idea, really in 30,000 feet. But this is something that we are working on. Specifically with stable coins, so there are a few big questions, right? So what sort of legislation we'll see? Is it about fiat-backed stable coins that have systemic risk? Or is it around algorithmic stablecoins because of Luna and everything? What would come first? If anything, who can mint, who can't, where? And since nothing is there right now, we're just being as prudent as we can and just doing things the right way. Obviously, JED is a decentralized protocol, and in that sense, so the issuance is done by using the tech. So there's no entity that issues the stablecoin. So yeah, I know it's a bit all over the place, but I hope you kind of understand where we're going with things.
It was a 10-cent question, and you gave me $1 back. Thank you very much.
Thanks.
Neat. Go ahead, Crypto College.
Hey, how's everybody doing? It's Nate from Crypto College here from Maine, United States. So my question's more in regards to ADApay or in COTI's involvement. I believe you're doing DJED Pay now, and its integration within the CNFT marketplaces like JPEG Store and CNFT. Do you guys have some correspondence going on with there? Maybe are we going to be able to see some maybe some listings for NFTs with stablecoin prices that don't have to constantly fluctuate with the volatility of ADA or anything like that?
That's super. That's you asked me a $10 question, and I'm going to answer in 10 cents. The quick answer is yes, we are talking with. That's without limiting my answer with various marketplaces of NFTs on the Cardano ecosystem to do exactly that.
Come on, Shahaf. You can drop the alpha. It's okay. This space is not recorded.
Yeah. No, but I don't want to steal. I don't want to steal anybody's thunder.
That makes sense. Go ahead, Mr. King.
No, I had a question about the Vaper wallet. As far as being in the United States, I don't have access to the Vaper wallet. So my question is, why is it not possible for us to, go through the KYC process, be denied for that, but still have access to the Vaper wallet with only receiving and sending COTI and not access to the treasury?
Yeah, look, I really get it, but the advice that we got right now, and again, it can change over time, and like with COTI V2, this is going to be very different, by the way. But the advice that we got right now is like nobody can back us up if we're doing anything with that, even receiving or anything, and it's been the pain of my existence in dealing with lawyers and actually. Asking all these questions that do make sense to me, like why not? But the fact is that nobody will back me up. Like any, not even one firm will back me up if I allow that to happen. So this is how painful it is. It will be different, by the way, in COTI V2, but we'll get into that in a few months.
Sweet. Conscientious?
Yes. I would like to say thank you to the host and Shahaf. I have a question. How will the G-COTI be fairly distributed, and will ERC20 holders receive G-COTI as well?
So yeah, so fair distribution. What's that? Actually, fair distribution means that nobody needs to pay for the token. So, and maybe some background, because some may ask, what is this G-COTI anyway? So as I've mentioned, there is COTI, right? And COTI has a big treasury, and it's very successful. And we wish to create, on top of multi-dag, create a new token called G-COTI, which will be the governance token for COTI's treasury. It will have various utilities around the treasury. So that's that. And it will be valuable because the treasury is valuable. So what do we do with that? How do we make sure that it gets to the right hands? First thing is we're not selling it. We're giving it away. Like a big chunk of it will be airdropped. I think it's 10 to 15% will just be airdropped. And the remainder will be released to those who interact with the treasury over time. So it's free.
Right.
It's valuable. The second thing is that obviously there are no VCs, no whales, no investors. Nobody holds GCOTI. Nobody paid for it and now holds a big amount of it, vested or unvested. None of that is relevant. It's just the only people that will hold it is those who are part of this airdrop. There is no pre-minting, so we may mint it, but like it's not that people will hold massive amount of it and it will be like quote unquote an ICO or something like that when you have investors and unlocks and everything that is quite painful for other holders. And for those who remember when we did the crypto volatility index and with its token GOVI, we also did an airdrop, and that turned out to be like a very lucrative airdrop. We've essentially airdrop was back then like $16 million worth of tokens completely for free. Now, how do you get GCOTI and how do we make sure that it falls in the right hands? The idea, and again, we'll publish that, but if you are able to prove your resilience in the sense that you are locking your COTI in the treasury for a substantial period of time, meaning you're not here today, gone tomorrow,
right?
Then that makes you eligible to get GCOTI. Specific amounts, rates, and everything that will be disclosed over time, but that's like the base criteria. There is also a chunk that will be and that, by the way, for those who are familiar with this, it's kind of like a lock drop mechanism. You lock and then you're part of this airdrop. When it comes to, and so that's one thing. The other thing is if you are part of the community, right? You're part of whatever marketing initiatives or other initiatives that we have. You take part. So hey, you may not have a lot of COTI. That's just the reality of it. But you're still part of this ecosystem, right? So how do we make sure that you're benefited? We track that as well, and you'll get GCOTI as well. When it comes to ERC20, because obviously we can't have COTI ERC20 in the treasury. There is a mechanism that we're working on without disclosing too much right now, but think of other entities that can be involved that can handle ERC20, and you can kind of do the campaign there, do the lock there, and then get GCOTI. Other than that, as we'll disclose, there will be other types of assets that you can lock. But we'll share more details, probably in a month's time, and then you'll see. There's nothing to do about it right now, other than make sure that you have enough COTI, that you interact with the treasury, that you understand everything, and then we'll disclose everything.
Yeah, I get it, and thank you. But the point is being in the U.S. and holding a generous amount of COTI and not being in treasury or the staking rewards, then we kind of get left out.
No, you will be. No, but you will be able to participate. That's what I'm saying. Not directly through the treasury, but there's we have other ideas on how you can participate.
Okay, good.
So yeah, we are working on it.
Awesome. Thank you so much.
Sure.
Neat. Go ahead, Joanna.
Thank you, Lido, for holding the space. Thank you, Cardano over coffee. Really great conversation. I came in a little late, so I apologize if this was covered already. But I have kind of two questions. One is more of a general question, and I'm just curious, what has been the largest sort of hurdle for rolling out stable coins on Cardano? Because it's sort of been a promise that's been rolling for probably over a year now. It seems very slow in the development process. Just curious if it's a technical issue we're having or if it's a regulatory issue. And the other thing, it's a little disconcerting being an American citizen and continue being locked out of these products. And that was another half of the question is like when can we expect to really have full use case of stable coins for American citizens? And and why do you think that coins like USDC and USDT have been able to be in the American market for so long? Is it that they had a first mover status, or are they just playing fast and loose? I'd just love to get your perspective on that.
Sure. So let me start off in the order that you've asked it, right? So the hurdle is tech. It was always tech. Regulation is something that is there. It's in the horizon, but there's no clear guidance right now about do or don'ts. And so it wasn't a hurdle. Obviously, we've been following and we've taken a lot of advice around it. But it's nothing there is a showstopper right now. So it was just developing the tech, and to be honest, it's not that slow. It's just pretty complicated. It's all smart. Look, doing like a fiat-backed stablecoin is like the easiest thing in the world when it comes to tech, but regulation is more complex because you need to work with traditional finance, right? These type of stablecoins is the tech is where the difficulties are, and I guess that when the smart contracts will be published and open source, you can see like the level of work that has been done there. Right. So with JED, and I don't know if you've missed it, but as I've said, anybody can interact with the smart contract. Nobody can block that. It's a decentralized system. Whatever is there on DEXs or centralized exchanges is again up to the DEX or the centralized exchange policy with or without the US. I know most are. At least on most DEXs, you don't have that issue. The geofencing is done on the front end level on JED XYZ. USDT, I think USDT, by the way, they've been in the game for very long, and I don't think they bothered to begin with. I don't know what they're doing right now, but to begin with, I think they were just wild. USDC has. There's no like specific regulation around stablecoins now, or like a license that USDC got. But being in the US, they've worked with regulators, officials, and whatnot, and probably received like a very good guidance and legal advice on what to do and what not to do. And this is why they're out there right now. How will this look in the future? Let's say there's a specific regulation. I'm just exaggerating right now, but let's say only banks can now mint stablecoins. Then USDC will need to figure out what they're doing. That's the burden of that. So yeah, I totally get your pain. Like for us, it would have been great to be able to freely work in the US, but this has always been the advice that we got, that we just can't and shouldn't. So we don't.
Yep, I appreciate the answer. Are the stablecoin communities on sort of like the development level? Do you guys talk with each other? I mean, do you know people over at USDC or people who are at Tethered? Or are they all pretty siloed?
There's no like a forum of sorts, like a community of stablecoin issuers. Would have been nice, by the way. We are in touch with the USDA team, like the Emogre team that is doing fiat backed on Cardano, and we actually like the team. So we are actively discussing with them about a few ideas and a few things that people can expect. The legal firms that we have been employing have been working, with the stablecoin that you've mentioned. So we are taking advice from what should be the best right now.
Awesome. Thank you so much. I appreciate your openness in fielding these questions.
Sure.
Just a quick check-in on the time here. We are 13 minutes over what we have scheduled you for. How are you doing on time, Shahaf? Want to be respectful of your time.
Yeah, don't worry. I've missed. I had another call, but I've sent someone else to do it, and hopefully he's doing well. So a big shout out to Yair, who's taking the economy call instead of me. So hopefully they didn't mess things up.
Oh, sheesh. Maybe I should have asked 30 minutes ago.
Nah, don't worry about it. Don't worry about it. I can be assertive when I need to. Don't worry.
Okay, sounds
Perfect.
good. We only have about 15 minutes left in this show. So that's the most this is going to go. If that works for everybody. Go ahead, Blackjack.
Shahaf, I had one more question. It's surrounding so with Terra Luna, there was an issue where with the ERC20 token, a lot of people didn't know this, that someone could just come in and lock that wallet with that token in it within the ecosystem. Now, with Cardano's layer 1, that's not possible currently. Is this something that you guys have thought about going forward? Because one, being an algo coin, two, the fact that it's in a decentralized ecosystem, which once it's in there, it's like out in the wild is the way I look at it. And from there, it can no longer be grabbed. Say if a federal authority or some other authority said, hey, we've got issues with money laundering or terrorist activity, et cetera. Have you guys put that into play and thought about that at all?
Yeah, we are obviously aware of it. And by the way, not all ERC20 tokens can be seized. It's kind of like how you built the smart contract. So USDC, for instance, USDC, sorry, can be seized, but not all ERC20 tokens. And no tokens on the Cardano ecosystem can be seized, and JED will not be different in that sense. So this is how it is right now, and we don't plan on doing anything different. Like we don't plan on figuring out a way of how authorities can seize JED or SHEN. It's really not up to us. It is a decentralized system. You hold the keys to your ADAP. You've minted through an autonomous smart contract JED or SHEN, and now you own it with your keys, and that's yours, and nobody can seize it now or not in the future. This is not something that we plan on implementing at all.
Right, and I'm an ardent supporter of that, and that's one of the reasons I love Cardano so much. But the idea surrounding it is, and this is a question that's come up with me and with our fiat-backed stablecoin, in that once it goes in, do you guys have some sort of way of managing that on the federal side? And really, it's just with the custodial wallet going in and coming out. That's it. So if anything else comes up, obviously at that point, it's probably going to be a precedent set due to a legal, it going to court and what have you. Is that something that you guys think as well, or I'm just kind of trying to get an idea of what you think about it.
Obviously, with custodian wallets, right? If the custodian holds the keys, then he can seize your JED and SHEN. But we don't plan on building a wallet or at all be a custodian at any given moment of JED, SHEN, or ADA. This is a fully decentralized system. Once it's launched, it's out there. It's in the wild, as you've mentioned. It's a force of nature, and nobody can interfere with that.
Great, thanks, Shahaf. Appreciate the answers.
Sure.
Tia Jenny, what's up?
Hey, this has been great, Shahaf. Thank you so much for all your answers. You've been great. I am here because I received a question from the audience, so I just want to read it. And it says, what happens to JED if the oracle goes away?
As we've mentioned, there's a lot of redundancy around this. There are 6 oracles actually that need to support that. And I guess, let's take this into the extreme. What happens if 6 oracles all crash at once? Yuval, I think you have an answer for that, right?
Oh, yes. So in case of the oracle is not being deployed anymore, then no new orders can be processed. Therefore, the state of the stablecoin will be the same as it was. So it can be changed. There is a dependency between processing orders and having a solid oracle also deployed on the network in this current version.
Thanks for that. Before the next person go here, what does JED have to do with COTI the token? And are these two, or is this JED is completely separate product? Or is it crossing? Or where are the smart contracts running? Is that on Cardano? Is that on stuff on you guys' side? Can you just
No,
talk about that?
yeah, sure. So everything runs on Cardano, JED, SHEN, ADA, the smart contract, everything runs on Cardano. And like the version that you'll have out there right now, smart contracts and everything was actually developed by IOG. Where does it fit with COTI, the token? As I've mentioned, COTI has an operational fee that it collects from the smart contracts. And using that fee, we buy COTI at the market and send it to COTI's treasury. So because this project is managed by COTI, COTI community benefits from the upside. So this is the relationship.
Thanks. What's up, Babowski?
I just wanted to quickly ask. Thanks, Lido. I just wanted to quickly ask two questions. The first is whether or not the JED will be open source, fully open source, the protocol, and then the second is, and I may have missed this, but when is the target launch date?
JED is will be fully open sourced. Once we go to the public mainnet, we'll then unveil the code, and we will do that with the audit. So there's that. Targeted is in January. We don't give a specific date just because it's not set yet. We are working on a few things, but yeah, this month.
Thank you.
Okay, last question, and then we'll start to wind this thing down. The space tend to divulge into silliness the longer it goes. So while we're ahead, we'll quit. Jonah, you get the last question. Go ahead, please.
Thank you, Lido. Unbelievable. So I wanted to follow up on Jenny's question from the audience. Can you just speak a little bit about who's running the Oracle nodes? Are you running all of them? Do you have independent operators running them? Any information on that node structure?
Yeah, I think Yuval will take it. I think he kind of like answered this before, but Yuval, go ahead.
If you can please repeat this one because I didn't quite catch it.
Sorry. Of the 6 nodes, are they going to be run by COTI, or are they going to be run by independent operators? I'm sorry if it was already answered.
The oracles, right?
Correct. Yes, the oracles.
Okay, because nodes wasn't the oracles. The oracle itself will be run by COTI, but the sources are from 6 different exchanges, so including CoinMarketCap and other esteemed exchanges that you can rely on.
Excellent. Thank you.
Well, that brings us to the end of our time together. Any last thing, Epoch, before we should have dropped the mic?
Yeah, I think I just wanted to point people at anything that we need to point them at. If there's any resources or call to action that y'all have on your team, we'd love to share it here. If you're looking for folks to join your Discord or sign up for something, this is a great time to kind of just let the community know how they can get in contact with your team, and if there's anything that's kind of top of mind.
Okay, so to begin with, everything around JED is at JED.xyz. So that's the platform, white paper, tutorials, and everything. And the name is unique enough, so kind of like if you Google it, you'll probably find a lot of information. COTI itself. So we are at Twitter. We are at COTI Network, and in Telegram. I would say this is like our main channels. So Telegram and Twitter, and we are always available in COTI.io. And a new website is coming. Has been coming every day for the last 3 weeks, but it should be coming as well, and you can see a lot of things there as well.
Great. Well, thank you so much for coming on the show. I think it was awesome that you had some of your team up here as well. We got lots of questions. I think this is the busiest Cardano over coffee that we've had this year, and maybe over the last few months as well. So shout out to you and your team
Thanks
for
a lot.
building some excitement here. I think we're all excited about JED and SHEN And I know I'll be, ready to go once these things hit secondaries, because I am in the US, so I know my activity is limited, but I will be, scoping out all of the dexes to see what pops up.
Cool. Thanks a lot. Thank you for having us. It has been great and interesting for us. And let's do it again in the future.
Absolutely. You're always welcome, guest, to come back. We'd love to hear updates, especially as things get closer or big dates get announced.
So sorry, Epoch. One last thing. So Hero likes to do these. You might have seen them on the profile, maybe not. He likes to do these clips, and he puts them on TikTok and YouTube and stuff. So can you give us a 1-minute elevator JED? What is it? Anything along those lines for that clip?
Okay. So sorry for the impromptu on the spot here, Shahaf, but you have 60 seconds to tell us your most witty sound bite of JED.
Okay. So JED is an over-collateralized stablecoin, soon to be launched on the Cardano network and planning to be the biggest stablecoin in the Cardano ecosystem. JED is over-collateralized using a lot of ADA, which makes it very safe and makes sure that it does not lose its peg. The way that collateral gets into the platform is with a token called SHEN, which is more of a speculative token that those who provide ADA to the smart contract are getting SHEN. They're getting fees associated with the operation of the protocol, farming rewards, and everything around that. JED will hit the ground running because it already has over 40 partnerships in the Cardano ecosystem. And, what we think is that JED to Cardano will be what USDC is to Ethereum. It will be the leading stablecoin.
Awesome.
And
well
cut.
done.
That was great. I'm sure Hero will love that.
Yeah,
That was great.
I will listen to it because I do need to get this in writing. So yeah, thanks.
No, I thought you did great. That sounded like you almost had that prepared. I don't know if Lido's serving you up some golf balls.
It's all in my hand. All in my head now.
Well, thank you again, Shahaf.
Yeah, no, that was great.
We'd like to give a special thanks to our guest Shahaf and the COTI team for joining us today, and we look forward to hearing updates soon. Special thanks to our sponsor, YAM4, where you can get crypto loans with no margin calls or interest repayments and indefinite loan terms. Check them out today at yam4.com. Join us Monday through Friday at 2:30 p.m. UTC live on Twitter Spaces, and follow us on all our social medias with the links down below.